Hey, good afternoon traders, and welcome back to the channel. Today we're going to look at UnitedHealth Group, and I'm going to show you some of the interesting things I'm seeing in the chart, both from a bullish standpoint and potentially a short-term bearish standpoint, and give you some price targets on where I think this is going and ultimately why I think this is a strong buy going into September and into the end of the year. So without further ado, let's jump right in. First thing I want to do is show you this platform called Hub, and it's a really unique platform because what it allows you to do is plot Elliott Wave analysis knowing nothing about it itself. So you could be firmly confident in the Elliott Wave theory plots and where things kind of stand relative to that. And what's interesting about that is you can see based on Elliott Wave theory, it has us fully completing a 5-wave impulse down. You could see we had a complex ABC correction that took us through this 5-wave impulse into this new 5-wave impulse to the downside. So we could be confident that the bottom is likely in for the short term down at that 235 area. So jumping back to my charts, let's kind of look at where prices stand and where I think things are going from here. So clearly we had this massive breakdown from this pivot top high of about 604 into our pivot low at about 236. So once we had this 3-wave impulse, this third wave here, what we were really forming, and I kind of want to walk through this technical analysis here because it's important as to where we currently stand, is we had this downtrend and right there we had this move here. So we had this move, and then we had a sharp move up on that reflex or rebound move, and then we put in this bullish consolidation. Now, from here, we broke down through that down to the bottom. So a failed bull flag, essentially, led to this lower low, right? But what's interesting is that this lower low marked bullish divergence. So we had higher lows on the RSI, lower lows on the price. That's the bullish divergence. And from there, we launched up. This was the news that Berkshire Hathaway acquired 5 million shares at a cost average in Q2 of about $300 and I believe it was $14 a share, which puts us basically at the same spot and just a little bit lower than where they actually acquired those shares. So they were acquiring and accumulating inside Q2, which is this May to June area, and then at the end of Q2 they had to file the SEC regulation filings, and then on August 14th it was announced that they took that active stake. So clearly we had this move up, we had this gap up, and now we are putting in new bullish consolidation. So let me mark that for you and show you that. So we have that resistance there, and then we have the support here, which takes us into another triangle. So clearly we have this up move, flagpole, bullish consolidation. And now the difference, you might say, well, we had this move here and we consolidated and broke down, and now we have this move here. Well, we never really got above the moving averages in this case. So it was prone and more likely to a failure, and that's exactly what we saw. Now in this case, we flipped bullishly, and now we're confidently above the 9 and the 20-day EMA, above that ribbon, that moving average ribbon. So, and it is holding it quite well. So let's zoom in. Let me take you through that a little bit. You can see these pivot or these lows wicked into it, held here, held there, held even here today. So price action is constructively bullish in my opinion. Now, is it probable and is it likely that we fill this gap? It would be my first question. And the answer is possibly, which would give us another failed move and could potentially put us lower. But because of Elliott Wave and because of where that shows things, I think the bottom is likely in here, and I think this is going to break to the upside. So what might that look like, right? We're having the consolidation on RSI that's coming down, and here we are. So I think it could do something like this, might consolidate a little bit more, and then we might do a breakout. Where would we go? Well, the first price target would naturally be there for a move like this. Why would it go there? Well, we have this high from those these pivot top highs on that previous bull flag. So it's very probable that we would go to about 325 here, and then we might reject, sell down, back test either the top of this triangle or potentially even back inside it. We might even see a fake out where we get like a bear trap that takes us into there. Could we go lower and could we test here? Anything's possible, but I don't think that one's as probable just because of everything I just laid out. So I think we're either going to do this or we will do something like this, maybe the median line or even down here or here. So just keep that on guard and in your pricing projection or analysis that we can do really any one of these things. We could even overthrow, go a little bit higher, maybe hit this high of maybe 335 and then come back. So all of these things are highly possible and likely very probable there. So that's kind of how I see things. As for me, I'm taking a position in it now, being a little bit aggressive because I think that, like I said, I think this is going to resolve to the upside. And, I'm prepared in the event that we get a fake out and we come down, fill this gap. I'm prepared to add here. That would be a great dollar cost average. And then even, somewhere down here or even double bottom down there. The other thing we might be forming, so if it does pull back into this zone, we might be actually forming a inverse head and shoulders, right? So you have that left shoulder there, you have your head here, and you have your right shoulder potentially there. So that is also in the cards and something that is very, very possible. I don't think that's likely. My primary pathing, like I said, is to resolve to the upside, back test, and then go higher. Just simply because, again, the things I outlined earlier in terms of Berkshire Hathaway and their investment stake at the cost average here. But we could see something like this. So just be prepared for it. We have this high volume node here over to the right, which naturally is all of this price consolidation. And if we put on let me show a demand zone, a supply zone, we can see we have basically all of this price action in here. So that is all supply, right? This is all distribution. In this case, it was accumulation. Here, it's it's a supply zone. So naturally, there's going to have that consolidation. And once we get above that, we're off to the races. Why? Because we have this massive air pocket of volume here. So I think first primary price target, once we kind of resolve out of this this local high, is going to be this gap fill at about 381, which by that time, the 150-day moving average should be right into that. So you'd have kind of this double resistance, if you will, this area here. Actually, I said that wrong. It's about 178. So call it 380. This area would be the primary price target. Now from there, if we can get through that, consolidate above, clear the 150-day, the next price target or price level, if you will, would be somewhere in this area here at about 440. So those are my two primary price targets. Just be careful if you're getting into this early. Know it can do a couple of these different things. If you're playing a stop, you're going to want to put your stop. Well, again, there might be a bear shakeout and a fake out here. So really, you got to be prepared to kind of own this one for a while because any of these things are possible in this particular stock. But I think long term, 6 months to 9 months to a year, this thing will pay dividends in owning it at these levels. So that's all I got for you today. I hope you appreciated and liked the analysis. If you did, hit that thumbs up, show your love for the channel, subscribe. If you're not already subscribed already, tick that little bell and you'll get notifications in real time as they happen, as opportunities like this present themselves in the market. And as always, no financial advice given. I encourage everyone to do their own due diligence on stocks before entering. This is only to show you what I'm doing in my own trading portfolio and how I'm deploying my capital in these very volatile and exciting markets. So until next time, thank you for tuning in. See you on the next one. Take care.